Are tax assessment methods the same for residential and commercial properties? Breaking news for property owners and investors. The question on many people's minds right now is whether tax assessment methods differ for residential and commercial properties. With property tax season approaching, understanding these differences is more important than ever. Let's break down what you need to know. Tax assessment methods for residential and commercial properties do often differ. This difference reflects the unique nature and use of these property types. Several common methods are used to assess property taxes. One method is the comparative method. This estimates property value by comparing it to similar properties that have recently sold in the area. Adjustments are made for differences like size or condition. This method works well in active markets and can apply to both residential and commercial properties. However, its effectiveness relies on the availability of comparable sales data. Another method is the unit area method. This calculates tax based on the built-up area, like square feet, multiplied by a fixed rate per unit area. The rate can vary depending on location, property usage, and construction type. While this method is simpler and more transparent, it may not always reflect true market value. The capital value method is also used. Here, tax is based on the property's market or declared capital value as determined by government rates. This method is straightforward and linked to the market but can be inaccurate if values are outdated. Notably, the unit area method explicitly differentiates rates based on whether the property is residential or commercial. This indicates that tax rates and sometimes assessment formulas vary by property type. In practice, commercial properties often have different assessment criteria and tax rates compared to residential properties. This is due to their distinct market dynamics and uses. For example, commercial properties like office buildings and retail spaces may experience larger fluctuations in assessed values. These fluctuations reflected market trends specific to commercial real estate. Recent data from Nashville's Davidson County shows significant increases in assessment values for commercial property categories, such as office and industrial properties. These increases differ from residential property assessments, highlighting the different treatment of these property types. While some assessment methods may be used for both residential and commercial properties, the specific rates and valuation approaches typically vary. This means tax assessment methods are not the same for residential and commercial properties. Understanding these differences can help property owners and investors make informed decisions.